Every economic shift creates two groups of people. The first group gets nervous, they pull back, they wait. They tell themselves they'll act when things feel safer. Now the second group, they do something very different. They start looking for opportunities because experienced investors understand things that most people don't. Some of the best opportunities in real estate will appear in uncertain times, uncertain markets. So right now, March 2026, I'm going to talk about what the investment landscape looks like right now, why uncertainty creates opportunity, and how investors actually think during a market shift, similar to what's happening right now. So the average person, they're going to see uncertainty as a risk. An investor will see something else. When markets become uncertain, a lot of buyers will hesitate, but sellers will become more flexible and negotiation power goes up. And when these conditions exist, deals, well, they just start popping up and you can take action on them with a little bit more leverage. Now, don't get ahead of yourself. That doesn't mean every property that appears becomes a good investment. It just means that these great opportunities become easier to find to those that understand how to analyze. So let me tell you why boom markets, what we saw in 2021, 22, are actually harder to invest in than a market like today. It seems ironic, but the reasons are the competition is insane. You have no leverage. Prices escalate rapidly due to the competition. And this just means investors start overpaying and killing their margins. And a lot of this is spurred because of FOMO, fear of missing out. You've got everybody running in the same direction. Like we saw during the pandemic, properties were selling in hours, unconditional, with multiple offers. That in itself is crazy and alone makes it a lot more difficult to walk out on the other side with a good deal on an investment property. And in some cases, people were buying based out of emotion rather than looking at the numbers because of all the excitement. And this environment just makes disciplined investing significantly more difficult. So a good opportunity is usually going to come from a combination of factors. A property sitting on the market longer than expected, a seller under pressure to move, a buyer pool that's temporarily shrunk or sitting on the sidelines with uncertainty. Now, when these conditions exist, the buyers that do take action, they have more negotiating power. They can structure better deals that are in their favor, i.e. protecting themselves with conditions. And they can take the time to do their due diligence and analyze properties correctly. Focus on the long-term fundamentals rather than short-term hype. This is where disciplined investors thrive. Now, there's one thing that kind of traps a lot of new investors. Again, it's trying to perfectly time the market. You're doing yourself a disservice by trying to search for perfection. Everyone wants to buy at the absolute bottom, but the reality is even professionals rarely identify the bottom in real time. Markets only really look obvious in hindsight. Successful investors really just focus on one thing, finding good deals with strong fundamentals. Now, there are a lot of different factors, a lot of different fundamental things to look at when making one of these decisions, but some core principles are securing a property at a reasonable price. Depending on your goals, maybe it's holding that property for a long period of time or making sure that you're cash flow positive to a certain degree, and overall making sure the investment is financially sustainable. Again, focusing on things like cash flow and carrying costs, strong location, and long-term demand drivers for that market area, because the goal isn't short-term speculation. The goal is building long-term wealth. So let me leave you with this. Every cycle in real estate eventually passes, and that's actually applicable to every market. Every cycle passes, and years from now, people will look back at today's market and say something very familiar. I wish I had bought back then. But the ones who succeed in real estate aren't the ones who wait for certainty. They're the ones who understand the cycle and make educated decisions. They prepare properly and move strategically when opportunity appears. So if you're considering investing in real estate, build a strategy and position yourself intelligently, because the goal isn't reacting to the market, the goal is staying ahead. So as always, I'm Titorenko. Don't be a statistic, and I'll see you in the next one.